I have a question. I have a few questions, but I'll start with one. When you mentioned, if I understood you correctly, you mentioned that talking about the dismantling of the lawmaking authority of the colonial period. And while there are different readings of what happened, you used the word that there was the elite of the Ottoman Empire and during the Tanzimat were willingly adopted European law. I'd like to talk about that because that word willingly, I think, poses a problem. Because, in terms of codification, there was codification of Islamic law before the colonial period. It was just a different kind of codification. It wasn't a Western codification, but it was a clear codification which developed over centuries. There were different diversity points of view in relation to a specific question. We can get into the specifics if you want. But the colonial period, of course, as you said, superimposed British law, French law, etc., European law in the different contexts. And I'm not so. I wouldn't use that word willingly. I would use that there was another. I'm a historian, so looking back, of course, in 15th, 16th, 17th century, looking back in time, there was a specific break in the colonial period of visible, let's say, of public or visibility of what was going on with the development of Islamic law. It never stopped during the colonial period. It continued to develop. It continued to, we see, for example, in the tribunal law courts of the 19th century, local law courts, which continued to function on another level. We continue to see the Islamic law which continued to develop, but that other level of colonial law which was superimposed. So if we get to the Ottoman Empire and talking about Tanzimat and that sort of hybridization of law, of course there was, how would you say, lock, stock, and barrel, European law coming into Ottoman law. But when you look at Majella and when you look at before the Majella, Islamic law is there. It's just that the visibility of it was not on the same level as the Europeanization of law. So I wanted to get your opinion on that.
You're the historian, and I certainly concur. I wasn't actually trying to say that there wasn't Islamic legal development taking place, but that over a period of time, and a very complex and convoluted history, there were basically two forces taking place, and one was the superimposition of law, and the other was the adoption of Western systems of law. Now, there was also a concurrent development, I'm certain, of Islamic law, and this is not a field of my research, but I think we can see that certainly by the late 19th century, this has changed. We have the Majella in the Ottoman Empire. By the 20th century, this really is coming to an end. And if we fast forward to the end of the 20th century, we see basically Islamic law represented in the area of family and inheritance. Even in these areas, it's modified greatly. Some would argue it's taken many of its norms from more international norms. But the sphere of Islamic law, I don't know what your opinion would be, but I think generally people see it as having been circumscribed quite significantly.
Just to say that Israel continues to use Ottoman law when the reappropriation of land, a lot of it is based on the Majella and Ottoman law. So when it's convenient, some states can use it, continue to use it.
Yeah, and there are.
But this is a long discussion. So.
And I think that there are remnants of the Majella as well in the Gulf states' civil codes as well. But again, these codes have been reformed to such an extent that the Islamic legal character, you will notice some of the Islamic legal character. You'll see the traditional contracts What you will see, however, is many other contracts that that are definitely un-Islamic. So it's a hybrid. It's a very complex. These are complex legal systems.
Thank you.
Pleasure.
I'm not sure I understood well your about regulation, because I regarding financial services.
Yeah.
But more globally, the US have a different way of regulation than Europe. Because in the US it's more based on principles. In Europe it's more based on rules. It's a little different. And you can choose in the US in financial services. You can choose your supervisor or your regulator, as they are different, and you can choose the best between some different. So there is some competition, and this is supposed to lead to the best supervisor and the best regulator. And so it look more close to the Islamic philosophy of law than Europe, or for you it still remains the same? Thank you.
Yeah, interesting question. I hadn't thought actually so much of the differences between the U.S. and Europe in that way. Certainly. The U.S. is a much more fragmented regulatory system, and as you mentioned, it's principles-based. London as well is principles-based too. But my basic premise there was not so much, financial regulation is something that has no classical antecedent, of course. It's something completely modern. To deal with modern financial markets. And so what I'm really looking at there is who are the rule makers, and whether the US and Europe, they have different strategies for doing things, but in general there are some major points that they do agree on. We can think of, say, the Basel capital adequacy and liquidity standards. Which began, in fact, with the G8. And what interests me in terms of the way in which legal systems interact is these power centers and their ability to promulgate law and to affect other legal systems around the globe. And this is certainly the case with Basel, which Islamic financial institutions also have to live up to, despite being quite disadvantaged from those very same standards, which are created for financial institutions that really originate from the North Atlantic region. No state from the MENA region took part or participated in the formulation of those standards, to give you an idea. So those standards were created by the G7 and now Basel III, I believe, by the G20, which includes different states. But the original idea, the 8% risk weighting, that originates with the North Atlantic states. And so everybody else, so to speak, has to play ball on that playing field.
Thank you very much for your presentation. I have an idea, then a question. So you try to explain why, for example, some contract with the big TNCs, for example, or sovereign, in the case of sovereign sukuk, generally it is preferred to go for common law in London or in New York or maybe in Paris. You try to explain the reason for that, and I think one that you have mentioned that we should make more emphasis on it is about the fact that in the case of, for example, even in the GCC countries or in Saudi, the practice of the jurisdiction system is so low, related to the fact that the country is not so much developed. So if you go for in the court, you will be sure to that your action will take a long time before getting your outcome.
Ah.
So when you go in London or in New York, so the system is more fluid, so you can see the result of your action. That is why I think the big corporations are doing for that. So your question about in which way those ethical values coming from Sharia or from Islam will try to influence the global system is, for me, is just simple as far as those countries are not developed, they cannot impose or give their advice or their point of view to change the inequality or the unfairness in the global system. What's your take on that? Thank you.
Well, those are interesting ideas, and certainly it's a good point you make about investors wanting to be certain in case there's a conflict that the conflict will be resolved quickly and hopefully with protections so that they will get at least part of their money back. That's a very big part of using those legal systems. With respect to the inequality of the system, absolutely. That's why I've emphasized power relationships. There's a paradigm that exists in the global economy, and as I mentioned with the Basel standards, the rule-making authority is still coming from the North Atlantic, despite the growth of other developing countries, and such as China with big prowess. Still, the rules aren't yet coming from China. They will eventually, but not yet. And so it's this inequality that an industry like Islamic finance is partially up against. But I would say there's something equally complex there. And that is that these states as well, including their populaces, have changed quite considerably. So that if they wanted to carry out Islamic finance in keeping with the spirit of Islam, they really could do so if they wanted to. But what has changed is that the entire world has been globalized, that this dynamic linkage between the local and the global has created a different understanding of wherever it is that we come from. The most far-flung location that has a few access to internet here and there are reimagining their belonging in the world, wanting to do ways that they read online or see in a film or see in an advertisement. And so I think the Gulf states in particular, but also the North African states, of course, and the Levant, all of all Muslim majority states have been strongly affected by globalization.
Many thanks for your presentation. At a glance, just a brief question regarding intangible assets. What is or what has been the place of intangible assets in Islamic finance regulation?
Good question.
Sorry for that.
No, that's a normal one. An intangible asset in Islamic law is generally not considered to be property. In fact, the Hanafi school of law even felt that something usufruct, which when you rent a car, that's the usufruct that the renter derives from the renting of the car, that itself was not considered to be property because of it being intangible. However, the majority of schools did feel that usufruct was property, but this basic skepticism towards intangibility is inherent in Islamic law. What is basically intangible is considered a dain, and a dain is really thought of as a debt. And a debt is not something that can create value. A debt is something that someone owes to a creditor, and usually a charitable loan in Islam is exactly that. It's charitable, given without any expectation of recompense. So basically, Gulf jurisprudence has prohibited the sale of debt. So you cannot make money from the sale of debt, which is the basic mode of finance in conventional markets. It's packaging debt and selling it off and making a premium with that sale. The basic Islamic law prohibits the sale of debt. However, everything Islamic is quite complex. The problem is there were some jurists, in fact, in the Shafi'i school who found it lawful to trade in debt. The Malaysians have used that opinion, that minority opinion, to, as well as the concept of maslaha, public benefit, to make lawful the sale of debt. And so sukuk in Malaysia are often comprised of receivables, murabaha receivables, which is a markup contract, but those receivables are to be paid, and hence they comprise debt. That is lawful in Malaysia. In the Gulf states, that traditionally has not been lawful. Gradually, we've seen an erosion of that basic law, however, so that now it was for a time that majority, an old legal maxim, majority determines the genus. So if it was less than 50% and comprised of tangible in the majority, it would be lawful. However, this is something that is constantly the markets are testing because of the difficulty of ultimately, particularly with respect to sukuk issuances, finding tangible assets that generate the enormous sums that they are looking to issue.
I heard you talking about this Islamic law in financial global market. Do you think that these sets of opinion or fatwas given by those big scholars can be gathered and make a kind of law for Islamic finance?
Well, yes, in fact, absolutely. And some have held that up as being slightly dangerous because there are very, very few so-called sharia scholars in today's world, particularly working for financial institutions. And in fact, there have been reports that as many as 3 scholars in all the Islamic banks operating in the Gulf states had occupied as much as 33% of the Sharia Supervisory Board positions. So there is a basic shortage of Sharia scholars. That may have changed over time. And I'm sure there are many more Sharia scholars in the pipeline, if you will. They are being trained. And so basically there is a concentration of some very powerful individuals who are determining Islamic financial jurisprudence. And this is arguably one of the most dynamic areas of Islamic jurisprudence in all the areas of law, simply because of the great demand for these types of products and services. So yes, this jurisprudence is being formulated, and what I hope my talk also got across was that it's actually not just the Sharia scholars that are promulgating the law. They are issuing fatwas, but what's happening before they're issuing fatwas? What are all the factors that come together that influence the actual legal opinion that they have to decide upon? And this is what it becomes. The lawmaking process now involves so many different individuals who are taking part in the market in a so-called kind of collective ijtihad that it is unlike anything in the past.
I would like to come back to one of your response to a question from one of the participants. My understanding is that you said that the effectiveness of Islamic law is an issue of willingness. If I understood you well, maybe let me take the issue differently. I don't think that it is just an issue of willingness, but the capacity of Islamic law, in particular from banking and financial industry perspective, to gain its autonomy from Western legal system, or the way contracts or practices are processed in Western countries, meaning US, Canada, and European countries.
It's not just a question of people's willingness or their devoutness. It's also an issue of the framework of law and economics, undoubtedly. But it is also a sociological question. And I can demonstrate that, I think, fairly easily. What would be the price, often the price to be paid, to transact in an Islamic contract that would represent the spirit, a classical spirit of Islam, if you will? And if we want to think of that, we might think that the classical spirit of Islam in economic affairs is about equality. It's about creating transactions that do not produce winners and losers, but produce winners and winners of varying degrees. But it's basically not about creating inequities or injustice in transactions. So the way in which we might get closer to these types of ethical values would be, for example, to develop products that catered to poor customers, or were less expensive for customers who, say, wanted to buy a home or wanted to buy a consumer item, and they approached an Islamic bank and wanted to get a loan, basically, to be able to do so. Well, an Islamic bank is not going to give them a loan. They're going to deal in probably a murabaha transaction, or they could deal in a financial lease transaction, an ijara wa iqtina. And the way they would do that would be basically to buy the asset for the customer and sell it back to them with a markup, either in one transaction or ijara over the course of many separate transactions. Now, what generally tends to be done is the profit markup is linked to the market interest rate. That market interest rate is an assessment of the cost of money, of the value of money. It's not unlawful to link a product with the market interest rate, but what it reflects is that Islamic finance is trying to be competitive. It is very concerned that its customers will go to another Islamic bank or even possibly a conventional bank. We can see this actually from both sides of the coin. We could say the Islamic financial institutions are just trying to survive in a really tough world. But we might also be able to say the consumers or investors of Islamic banks, they also want a competitive market return. And that market return is premised on the capitalist system.
To come back to your reference to the influence of Basel Committee, if I remember well, I heard in 2009 or 2010 that there has been set up a working group to lobby or to influence Basel Committee to have separate rules for Islamic financial institutions.
Islamic finance started off as an entrepreneurial endeavor. The idea, it started off with a guy he actually studied in Germany named Ahmad al-Najjar. He wrote his PhD dissertation on the German savings banks and how they could be implemented in Egypt. But ultimately, this basic idea of creating an Islamic bank had no legal infrastructure, and they actually had to approach the regulatory authorities, not just in their own states, which were because of the fear of political Islam at the time, were quite reticent to become involved with Islamic finance. What they ultimately did was approach the international financial institutions to gain their favor, to create, to inform them about Islamic finance, and to create to slowly put a legal infrastructure in place, which is remarkable. Bankers usually do not approach regulators to be regulated. It's quite the other way around. But the IFSB is a product of exactly this effort, the Islamic Financial Services Board. And they have developed capital adequacy standards that are specific to Islamic financial institutions.
I have another question, please. I'd like to have your opinion on something. As you were speaking, I was taking down some notes, and I observed something that's interesting that's going on right now in 2016 and a couple of years before, and certainly in the future, as in opposition to the colonial period, and talking about the superimposition of law, European law, on different countries around the world, not just the Arab Muslim world, but around the world. And the hybridization, in fact, even at that period, in the 19th century, the hybridization of local law being bottom up, being necessarily accepted in some situations, not just in private, not just in the private sphere, but in the sale of properties, in foundations, even if it was just to legitimize using, for example, different legal stratagems in favor of colonial project. So there was that bottom up and top down, but it was colonial power, the power relations, colonial power over local. Now, in this time and period, it's interesting because it's sort of reversed, but in a different structure. For example, now here, with the sharia and Islamic law being Islamic financial law or Islamic finances being introduced into the Western law over the last, 40 years maximum, but especially over the last 15, 20 years. Now it's the other way around, in a sense, because there is this, of course, Western law, but which is being, especially in the UK, but in other places too, which and certainly in the States, which is being progressively, how would you say, when you look at it from a pluralistic point of view, so there is Islamic law being introduced into financial law, not just in the Islamic sectors, but in conventional sectors as well. There's some sort of parallel. Well, there's parallel power structures in financial law, Islamic law, conventional law, but there's also hybridization between the two.
Yes.
I would like to hear your opinion on that, please.
No, absolutely. And that's that's a big part of what my book speaks about. What seems to have happened is quite interesting. Post-empire, post-colonization has ultimately led to a recolonization of the metropoles. So that the legal traditions of the former colonies have come to play a role in those centers of former centers of colonial power. And as you know, there are many scholars, and particularly many in the UK, legal pluralists, that are working on this issue, and in family law in particular. This is a big issue, and this is also exactly what has happened with Islamic finance. This is a reinsertion of Islamic law in modern life, and it's obviously a hybrid project, but it's important to take stock of that what we have is clearly a very large number of people being very dedicated to reintroducing Islamic principles in modern financial markets. And whether or not that has succeeded is obviously very controversial, but certainly there has been that effort. Many people argue that it's a matter of time, it takes time, it's an industry in its infancy, and this requires hundreds of years, which conventional finance has had. That might be the case. It's difficult to say.